Mode.
Good morning, everyone. This is Mark Raymakers here with Insurance Agency Marketing Services. I want to thank you for taking time to join us here for our Friday morning single premium life webinar. As you may or may not know, every Friday morning at 10 a.m. Central, we host a webinar that is one way or another related to single premium life, whether it's product, it's sales ideas, it's concepts. So this market is a continuously growing market, and we continue to just be excited with our partnership here with Baltimore Life. So we're very fortunate to have Gary Voith. He's a vice president of corporate marketing and communications, and he's going to really do the meat of the webinar this morning. So Gary, you can hear me okay, I assume?
Absolutely, Mark. Thanks.
Excellent. Yeah. So for all of you on here this morning, this is a recorded webinar. So the nice thing about that is you get a chance to attend this live. You get a chance to ask questions. We'll have the question box open for you here this morning. And then obviously when you get this later on today, you can review it as often as you want. It gives you an opportunity to maybe go through maybe something kind of blew by too quickly for you, or you just want to get a little bit more in-depth information that you maybe didn't have time to grasp during the webinar. It's just a good chance for you to review it. So anyhow, with that said, I'm going to go through a few different intro slides myself. We're going to have a couple of polls up this morning, and so be prepared for that. The quicker we get through those polls, the quicker we can get through the heart of this webinar this morning. So just real quick, want to introduce our website to you, just in case you have not been out there, if you weren't aware that where we're at, but we're at www.imzing.com. And one thing that we've done is we've established a spot on our website. In fact, if you look at here, you can see there's an umbrella. That's Single Premium Life. You can click on that, find our carriers, find products, find marketing, find a lot of great stuff to help you on the single premium side of your business. But there's a lot of other great things, our term quotes, any forms that you might want online. So if you want to get contracted with Baltimore Life, you can certainly do that through the website. You can also pull forms off of there. And so a lot of great stuff. I encourage you to attend that, or I shouldn't say attend it, but just go into the website and just kind of look around. If you have any questions, you can certainly call anyone here, and we can go ahead and help you with whatever it is that you're looking for. We do have the paperless contracting on there. So one thing I will do is we're going to have a poll out here this morning as far as getting appointed with Baltimore Life. If you opt that you want to do that, I will send you a form. It will allow you to be appointed with Baltimore Life and any other carrier that we might have. Maybe it's a term carrier, maybe it's an annuity carrier. The nice thing is once you get set up on this, you never have to complete contracting again. So I certainly encourage you to keep that in mind, and I will shoot that out to you here this morning, or probably later this afternoon, I should say, once we have a chance to get everything compiled here. Now, here's our first poll. This is important. I'm just going to go through this real quick with you here this morning. We're real big on training, and obviously you notice that because we're always sending out invitations for webinars. We have a very robust webinar schedule. We have one scheduled for every day of the week. So what we have here real quick this morning is a Life and Annuity Training Academy. If you are looking to grow your annuity business or your life business, or maybe even cross over a little bit, and maybe you're selling just one of those products and you want to add maybe annuities, or maybe you want to add life, here's a perfect example. Agents that are selling annuities are selling a good majority of the single premium life. So for example, if you wanted to do that, we have some presentations that will address that at this upcoming event. We pay for your airfare. We pay for your meals. We pay for your lodging. So basically what we're going to do is we are going to fly you out on a Wednesday. We're going to do a few short presentations Wednesday evening. Of course, we'll feed you. We'll have some time after with some beverages to get to know the folks that are there. We have a full day of training on Thursday. And Thursday night's kind of fun because we can really relax, spend some time getting to know everybody a little bit, talking about what we discussed during the day. Great chance for you to be sharing some ideas with other top producers such as yourself. And then we'll do a half a day training on Friday. And we've got speakers that come from across the country that are sharing some of their top sales ideas. We're going to talk about some products, but this is not a product session. This is more about selling. This is more about prospecting. This is more about doing a better job of cultivating what's in your block of business. So there's a lot of great stuff. And if you want to know more about this, if you're interested in the upcoming events, we do have one scheduled in July. That is the third week of July. We generally have 3 to 4 a year. Right now, we're scheduled to do 3, so we've got our second event coming up. If you're interested in any way in attending the event, one of these events we have left this year, or maybe even just getting an invitation so you can look at the agenda, I need you to mark yes. The sooner we do this, the sooner we can move on. But obviously, this is free training, and when and where do you get free training? You just don't hear about that. But the fact that we're paying for your airfare, your meals, and your lodging, this is a great way for you to grow your business. And I'll tell you one thing that I see. The most successful agents out there in this business never stop learning. They're continuously looking for ways to improve their business. And when you look at what's happened with the DOL, I'm not going to go into detail on that, but if you're not familiar with it, Google it, learn about it, read about it. This is an opportunity for you to prepare yourself in other areas to obviously ensure the future of your business. So I only have half of you that have voted in, so I don't know if you're catching the message here or not, but this is free training. This is an opportunity for you to grow your business, whether it be through life or through annuity, but you're just going to learn a lot of great stuff. And, I think that it's so important in this business today that you continuously learn. Things are changing all the time, from, products to writers, whatever it would be. So, and just because you mark yes, it certainly doesn't mean that you have to attend. It's just basically a way for you to get more information. And that once we have the other dates established, that we contact you. So, okay, if you change your mind and you want to know more about the Academy, all you have to do is just type Academy in the questions section, and then we'll go ahead and we'll get you some information on that. So in the essence of time, I'm going to go ahead and close the poll. I appreciate those of you that who did mark yes, that you'd like to know more, because obviously we want to help you grow your business, and that's what we're here for. So, all right, closing this, moving on. Creative services. Here's something we provide to you. If you're not receiving this today, wherever you're at, or maybe you're already with us, but you haven't taken advantage of this. But we've got a lot of different ways we can help you to grow your business. We can help you brand yourself, whether it be through just the basic marketing all the way up to television advertisements. We can and have done this before. So if we can help you in any of those areas, I encourage you to ask for Matt Neal. And Matt's the one who set up the webinar. He's not hosting this today. So call and ask for Matt, and he can tell you what he can do to help you in any aspect of providing for marketing or just branding your business. We have our top producers escape up here real quick. And I'm going to point out something real fast here. Baltimore Life has tremendous trips. I have been on their trips. They are a great time. So here's the nice thing to think about. As you write business with us, if it's with Baltimore Life, you're qualifying for 2 trips with the same premium dollar. So our top producers escape trip, you'll see that the qualification period ends June 30th. Now, I have seen agents qualify in 2 months before, so don't count yourself out. Anything you write with us counts towards that trip. We're going to travel August 3rd through the 7th. Once this qualification period ends, we start qualification for another trip. So just a great opportunity for you to be rewarded for your hard work, an opportunity for us to get to know you. And again, as I mentioned, you can qualify for 2 trips on the same premium dollar. Okay, so I am going to go ahead and, Gary, I'm going to turn this over to you. Let me just click a couple of buttons here and see if I can get this. There we go. Okay. I'm relinquishing control, Gary. Looks like we're good to go. I can see your screen. Perfect. And again,
very good. Well,
if you have any questions, please feel free to type them in the question box and we'll present them and as we go. So, all right, take it away, Gary.
thanks so much, Mark, and good afternoon, or good morning, I should say, everyone. I want to thank you for investing some of your very valuable time today to learn more about Baltimore Life's tax-efficient asset transfer program. Before I start, though, really, I'd be remiss if I didn't say to you, I do webinars with a lot of our partners out there, our marketing organization partners, and we've had such a great relationship with IAMS for so many years now, Mark. I'm always amazed when I see that slide deck that Mark presents at the beginning at the amount of support that independent agents out there can get from a great organization like IAMS. That academy is something that, my gosh, it's no money out of your pocket. It's a getaway, but more importantly, you're in front of some of the best producers out there in learning how to find the money, find the prospects. You can learn product at any time, but that is such a great opportunity. I'm still a licensed agent myself. Mark, I think I'm all in. But make sure you type. Yeah, make sure you type in the academy in the block. That's a great opportunity. Okay, so what are we going to talk about today? We're really going to talk about our tax-efficient asset transfer program featuring two products, our Generation Legacy and our single premium whole life product. Both of these products are really designed for your senior clients who have what we like to call some leave behind money or safe money or sideline money. Money they don't need to live on. They simply want to leave behind for the next generation. No matter whether those funds are coming from annuities, qualified plans, or after-tax cash funds, we have products that are designed to meet those needs to help your client increase their estate value and thus passing on a legacy. Before we get started in talking about the products, some marketing support we're going to be passing along to you today as well, and sales ideas, let's talk about the marketplace. It's absolutely huge. About $1 to $3 trillion in wealth is being passed each and every year, and that's expected to continue to happen between now and the year 2052. We know that about 55% of your clients' wealth is moving on to their family members, and about 16% of that wealth is moving on to their favorite charities. So yes, 71% of your clients' wealth is moving on to people and organizations they know and love. The question is, are they maximizing the amount of money they're able to pass along, and are they really doing it in the most tax-efficient way? Well, the first product we'll talk about as a solution is our Generation Legacy product. And this product is designed to take single premium dollars, transferring those funds into a product, and the single premium funds are coming from non-qualified deferred annuities as well as other qualified plan funds not needed for daily living. Of course, it's allowing you to increase your client's estate, leave that legacy, and the issue age for this product is issue ages 60 through 80. Now, our product very competitively combines a pretty nice package. With a single app you're going to write, we're going to issue two products. We're going to issue a single premium immediate annuity that will receive the transfer of funds, along with a limited premium payment whole life product. Both these products, once issued, will seamlessly be administered together by Balt for Life. Nothing for the agent to do, nothing for the client to do, to provide you all the benefits we'll talk about here today. Now, we have simplified underwriting, of course, on this product through 4 tables of underwriting, as well as our accelerated death benefit rider, which truly can provide living benefits to your client at a time when it's needed most. So what about the qualified market? It's also huge. About $2.3 trillion of in-force deferred annuities are out there. About 60% of that money are in tax-qualified plans, your IRAs, your 401ks, but about 40% of the funds are in non-qualified deferred annuities. As you know, annuities are great products. Great, way to accumulate wealth, do it tax efficiently and a tax-deferred basis, but most people are not necessarily annuitizing those funds, taking advantage of the guaranteed lifetime income that an annuity can provide when you annuitize the funds. They're just simply transferring those funds to the next generation. So it's a way for them to accumulate wealth, not necessarily take income. Of course, if you're working with qualified funds, there is an RMD rule that does kick in at age 70.5. So, one way or the other, you've got to start taking some of that money. But if you die, if your plan is only to leave that money to the next generation and you're going to die with the annuity, of course, you're just simply passing that taxation along to your family members. And, they're usually in a higher tax bracket, right? So the best question to you is, we know annuities are great products, but are they really the best products to die with? Well, we think there could be a better solution for your clients in those situations, and that's Generation Legacy. Let's think of it conceptually as a gift that your client's trying to pass on to the next generation. And in that gift box, you're going to be helping your client facilitate the transfer of annuities or qualified funds into this gift box. With a single application you're going to write for your client, we're going to issue two products, a single premium immediate annuity along with a limited premium payment whole life product. Once issued, Balt for Life will seamlessly administer these products together, and that over a period of either 7 or 10 years, Balt for Life will make annual premium payments from that SPIA to pay premiums on the whole life product. So what dictates the payment pattern? It's the issue age. So if a client's 60 to 74, we'll issue a 10-year payout on the annuity along with a 10-year limited premium payment whole life product. If the client's 75 to 80, a 7-year payout on the SPIA along with the 7-year limited premium payment whole life product. But here's where the magic of the benefits really begin, and that is, what if your client were to die somewhere during the period of time while that SPIA is being used to fund the life insurance, the 7 to 10 year period. Well, we know that the life insurance will always be there to pay an income tax-free death benefit, and that death benefit will be greater, of course, than the single premium paid. That's the magic of single premium. But with our product, very competitive feature, we will not only pay the income tax-free death benefit to the survivor, but also the remaining payments from the SPIA. So if the client's 2 years into a 10-year payout to pay that life insurance product and they die after 2 years, the remaining 8 years of payments would also be paid to the beneficiary. Most companies absorb that into the death benefit that's set up in the life contract. We don't. That's the remaining payout for the SPIA for your client. So this really makes it a quite competitive product out there on the market. Clients love it. So after the period of 7 or 10 years, the life policy is complete, it's paid up, the SPIA goes away, it's done its job, and now that life product continues to provide an income tax-free death benefit greater than the single premium. It continues to build cash value on a tax-deferred basis, and yes, it also continues to provide the accelerated death benefit rider. So just to recap, issue ages 60 to 80, we base our pricing on current age or age at last birthday. Now, the reason this is important is because when you're dealing with this product, you're transferring funds from other products and institutions. That transfer process may take 20 to 40 days, and we will issue the policy based on the age your client is the day we receive the funds. Now, the minimum premium to get this started, it's only $5,000. How many clients do you know out there that have small annuities, 5, 10s, 20s, $40,000 and $50,000 annuities, where their only goal is simply to pass the money along? Great prospects for this product. The maximum face amount that we'll issue based on the single premium paid on the life product is $450,000. Now, we have 2 underwriting classes, both non-tobacco and tobacco, and we will issue on a simplified underwriting basis any risk standard through Table 4. Now, we do have cash values, of course, in the life product. They accumulate on a non-participating basis. Partial surrenders, they are available from the life insurance policy where the cash value is, but they're permitted after the life policy becomes fully paid out, 7 or 10 years. Loans, they're available at any time from the life product at a maximum interest rate of 8%. So what about the accelerated death benefit rider? The accelerated death benefit rider is truly something that's providing living benefits at crucial times in someone's end of life, and it is automatically included in all states where it's approved, and that's the high majority of states. Now, I will say up front, and it's very important to know, accelerated death benefit riders are not long-term care policies. All they are basically is accelerating the life insurance benefits at certain pivotal end-of-life life triggers, end-of-life triggers, and we'll talk about those. If someone is looking for long-term care insurance, they should be buying a long-term care policy. But of course, as you know, very expensive to buy long-term care insurance out there. Most seniors cannot afford it. So isn't it nice to know that they can accelerate their life insurance benefit? There are 3 health event triggers that will allow your client to accelerate the death benefit on the life insurance product. They are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. This truly can increase that liquidity on the life policy's face amount, and upon the decision to accelerate, a lien against the death benefit for the amount that was accelerated and interest on the lien would accumulate at a maximum interest rate of 8%. The maximum that you can accelerate is $250,000. The minimum is $5,000. But the good news is this benefit is paid out once. It's paid out in a lump sum, and these are unrestricted funds that are going to your client for end-of-life needs. So now let's take a look at the definitions and percentages of payout. The first rider covers terminal illness. Simply put, the client needs to be diagnosed as terminally ill by their doctor with a life expectancy of 12 months or less. In this case, they could accelerate up to 75%. The second rider covers both nursing home confinement as well as extended care. And let's talk about the definitions. The definition for nursing home confinement, the client needs to be chronically ill, confined to a qualified nursing home facility continuously for expectation of permanent confinement. And here they could accelerate up to 50% of the face. The second rider is covering, the second part of that rider is cover extended care situations. Again, the client needs to be chronically ill, has been so for 90 days, but now they're requiring care provided by either a licensed home health care agency or a licensed or state-certified adult daycare center. And here again, they can accelerate up to 50%. Now, I will tell you that one state approval charts that you'll find on our agent site in the product toolkits, we show you not only the states that were the product and the riders approved, but we also show you that in some states, these rider percentages can vary, and so make sure you refer to that to make sure you know your particular state's requirements and percentages. What is the definition of chronic illness as it's applying to the qualified nursing care and extended care situations? If the client satisfies either of these definitions, we consider them to be chronically ill. The first one is they can't perform 2 out of 6 activities of daily living, but maybe they're okay on their ADLs, but they could be suffering from a severe organic mental illness such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So let's take a look at some examples. This is the client who has a $100,000 face amount on the life product. They're terminal, which means they want to, in this case, accelerate up to 75% of the face. So they're able to take a check that we're going to pay them as a living benefit of $75,000. Now, we do add a $100 service fee for the transaction, so the lien is established initially at $75,100. Now, if they were to die immediately after getting that check, no time for interest to accrue on the lien, the remaining death benefit would simply be the face less the original lien, which gives you a $24,900 death benefit. But the more likely scenario is this one, and that is that they die 1 year after taking the payment. Now there's a year's worth of interest against that lien, and I'm just going to assume the maximum rate. So the remaining death benefit in this example now is $18,892. Now this client in a terminal situation would have to live 4+ years for the remaining death benefit to be evaporated by the interest. Pretty unlikely that's going to happen, and that's why the percentages are set up the way they are. So let's look at, I'm going to go back one screen here. What are situations where the riders could terminate? Well, the first one would be, what if the life policy was ended for some reason? You might say, well, how can that happen if the annuity is paying for it? It would have to be something the client requests. If they got 3 years in, 4 years in, whatever, to this product, and they say, you know what, I really need some money now. I can't afford to let this go on and provide a legacy for my family. You technically could stop the life policy, which means the remaining payments from the SPIA would be paid as income to that client. Of course, there'd be very little cash value in the life product, and of course, the accelerated death benefit rider would also end. Obviously, if the client dies, we don't pay the accelerated death benefit. We pay a death benefit, which is income tax free. And finally, if you accelerate, let's say under the nursing home provision of 50%, that's it. We can't pay out time. We pay out once, and these are unrestricted funds. Now, in the very, very, very unlikely case that interest exceeds the remaining death benefit, that's where the client would be terminal and lives 4+ years to outrun the remaining death benefit. Technically, the life policy could end, but the policy owner does have the right to repay all or part of the lien at any time to keep this qualified as a life insurance policy. Now, do know that even though you accelerate a benefit, there's still some cash value accumulating in this policy, income tax deferred. And also know that if you have a lien against the policy already based on the accelerated benefit, you cannot also have a loan going on at the same time. The key thing to remember, though, no matter whether you're selling our rider or anybody's rider that's similar, you always want to tell your client to consult with their tax advisor. So what about the kind of a roll-up to this? What's this look like in a situation of a female 70, non-tobacco, who has $50,000 from an annuity, let's say? We would issue a face amount of $78,000, nearly $451. So we've increased her estate right up front at 70 by $28,451. If she wanted to accelerate the benefit, look at these payouts. For For terminal illness, right, $58,838. Qualified nursing and extended care, almost $40,000. This is real money to a senior client at end of life who knows they need some cash. They couldn't afford long-term care insurance. And knowing there also is going to be some remaining death benefit there is very reassuring. What about other taxation benefits? We know one of the tax efficiencies of the program so far is that when you pay a single premium, you get a much greater income tax-free death benefit. That's a pretty good use of money. But what about another tax-efficient benefit? It's the transfer of the funds. If you were transferring funds from an IRA where the money's never been taxed before, or you're transferring funds from an annuity where there's a basis and a gain, eventually that gain needs to be taxed, right? It's never been taxed before. But the beauty of this product is that when you transfer those funds, let's say from an IRA that's never been taxed before, into the SPIA portion of the Generation Legacy product, because it's going into a qualified SPIA, and it's going to be used to pay premiums on a life product over 10 or 7 years, we're also able to spread out the tax on that money over the same 10 or 7 year period. That's a good thing. And keep in mind that your policy owner, it's important for them to know this because they will get a 1099 each year during that 10 or 7 year period. So it's important they know that up front. Keep in mind that also the payments we make each year from the SPIA to the life product do satisfy the RMD rules. So you're good there. And on death benefit, the life insurance is income tax free, but what about the remaining payments from the SPIA? The remaining payments from the SPIA that are paid out to the beneficiary would be taxable on the portion that's not been taxed before. Again, Uncle Sam has to get paid on that type of money eventually. Keep in mind that the default method, we would pay out the remaining payments from the SPIA to the beneficiary are annual payments. So if there were 8 years left on a 10-year plan, they get 8 more years of payments. But the Benny could say, I want to commute it lump sum of that money instead. In either case, they would get a 1099 for the gain, just on the SPIA. The life insurance, again, is income tax free. One more thing on tax. When you write an application, because we are rolling money from qualified plans, we have to ask the question on our app, do you want a withholding on the money you're rolling over? We have to ask the question, but the way this product has been designed, the benefits of spreading that tax out, we cannot do withholding on the money that's being rolled over. So please make sure you check on the app that you do not want tax withheld from the annuity. Otherwise, we have to send everything back to you because the product just doesn't work, and you're really negating the benefit of spreading the tax. So now let's look at premiums to death benefits, and I want you to start thinking about those clients out there that, in fact, have leave behind money, and they really aren't planning to leave it behind anyway. So a 65-year-old with $50,000 in premium, we would issue a 10-year SPIA along with a 10-year life product. The male, we get a face amount of $77,361 and change. The female, we get a face amount of $87,031 and change. So what did you just do for this female 65? You increased her estate by over $37,000, keeping in mind that if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. Now, if she says to you, well, I'm in a 25% tax bracket, Mark, and I'm making 3% interest on my money, it would take her over 19 years in that qualified plan just to accumulate the $87,000+ that the death benefit would ultimately pay out. Always remembering that the life insurance death benefit of over $87,000 would always be paid out income tax-free to the beneficiary. What about the 75-year-old? A little older, a little shorter life expectancy, but the numbers still look good. But with that same $50,000 at 75, we would issue a 7-year SPIA along with the 7-year life product. For the male, the face amount is $61,516 and change, and for the female, $67,000, nearly $9. So even at 75, that lady has an increase in her estate of over $17 grand. The male, nearly $12,000. Knowing if they die in the first 7 years, the remaining payments from the SPIA could also be paid. The beauty of this product, and I've been around it for a long time, I've been selling it, agents working with them and selling it, is that once clients understand this, they love it. They absolutely love knowing they can pass that much more along to their family members, their favorite charities. And what's going to happen is that, seniors get out, they have dinners, they have lunches together, breakfasts together, and they're going to talk about this with their friends. So it's a great opportunity to leverage that understanding of the product and by asking for referrals from your client, and you'll get them. All right, let's take a look at a ledger on this, and I think it's really helping you understand the ebb and flow of the cash, and it will do the same for your client. Here's that female 70, non-tobacco, as a $50,000 annuity with a cost basis, her money, of $40,000. So when we roll that $50,000 in, each year from the SPIA, we'll make an annual payment of $5,570 to pay for the life insurance. But out of that SPIA payment to the life product, nearly $4,000 of it is excluded from tax, and based on the interest factor over the 10-year period, the estimated taxable income based on the gain is about $1,571. That's what she'll get the 1099 on each year. Of course, the ledger goes on to show the income tax-free death benefit of $78,451 and the commuted lump sum of the SPIA payout if the client dies in the first 10 years. Now, this ledger is representative of a piece of the proposal software that we make available on our agent site, and you can also get the same type of a ledger right on your phone, smart tablet, or any connected device. Make sure you write this one down. I'll talk about it later, but it's mobile.baltlife.com, mobile.baltlife.com. Mobile Link really gives you an agent guide and a calculator tool for these products right in the palm of your hand. What about submitting business to us? It's very simple. We try to make it simple on our agent site in that when you log into our agent site, everything is personalized. It knows who you are. It also will give you product toolkits for every product that you're contracted for with us. And in that product toolkit, you'll find everything you need to sell and market our products. One of the things is our printable application and forms package. You answer a couple of quick questions and it will automatically generate your forms list to complete for us. It will also give you a set of instructions of how to submit your business, the instructions for that, but more importantly, it's going to give you instructions, phone numbers, and times to call to complete your point of sale underwriting interview with your client. That's where as soon as you finish that app, you pick up the phone with your client there, make a quick call, and over 90% of the time, we're going to give you an immediate underwriting decision on that case. It's great. Clients love it because they came to the party to buy, but isn't it nice to know that they can get a decision and a confirmation on that purchasing decision right there and then? We'll talk more about point-of-sale underwriting in a moment. Out in that product toolkit, I'll be showing you more of these things later, but we just have a scat of other sales and marketing tools for you. I'll show and tell some of this later on. So now let's talk about single premium whole life. It's the sister product, and it really is designed with many same goals. A client wants to increase their estate, pass on a legacy, but there's some key differences. The first of which is the single premium whole life policy is designed to take after-tax cash funds, not qualified funds. So, your CDs, your money markets, your mutual funds, and where appropriate, 1035 life-to-life product exchanges. The issue age for this product also a little different, 50 to 85. It's broader because we are working with after-tax cash funds. Simplified underwriting, another difference. With this product, we offer simplified underwriting through 8 tables of underwriting. We'll talk more about that in a moment. And finally, we have that same accelerated death benefit rider with the same 3 health event triggers we talked about with Generation Legacy. One of the differences with this rider, though, is it's a little bit more lucrative in its payout, and I'll talk about that later on. So 50 to 85, again, based on current age or age at last birthday, 2 tiers of underwriting. We either have non-tobacco or tobacco, level 1, which is standard through table 4, or table 2 or level 2, which is tables 5 through 8. So a client with a few more challenging health conditions would qualify for this product. Your insulin-dependent diabetics, for example, where their insulin is controlling their diabetes and they don't have any other major issues going on. could potentially qualify at level 2. The minimum premium, $5,000. It only takes, again, $5,000 to get this started. When you go out and do a fact find and you're finding money, which is a big part of the single premium market, you're finding multiple CDs in that client's portfolio many times, right? And they compartmentalize their funds. Here's money for the kids, the grandkids, the church. When I pass, this is directed funds, and that's why they're set up that way. Here's another scenario you might run into, because you might say, I don't have a book of annuities. It might be difficult to write generation legacy because of that. Well, what about those clients if you're writing just life insurance and you say to the lady who's 70, she says to you, Mark, I really don't need any life insurance. I have a burial account set up. Well, that means one of two things. She either has a pre-arrangement at the local funeral home, or she's got a $15,000 CD set up at the local bank that the kids know that's the money set aside to bury her. Well, here's how that role play might work with you. Mrs. Jones, you're 70. You're going to live many more years. What if I was able to show you a way to take that $15,000 and provide your family with a nearly $25,000 income tax-free death benefit? Oh, by the way, if you became terminal, in a nursing home or an extended care situation, we could actually pay you some cash at end of life as a living benefit and still have, in most all cases, remaining death benefit. That's what we call the burial account concept, and I can't tell you how many agents got started selling single premium business in that simple way. They were selling $5,000 and $10,000 and $20,000 premiums, and then they got to understand how to find the money. The average premium, by the way, we see on the single premium life product is about $30,000. The average premium we see on the generation legacy product with qualified funds is about $60,000. Now, the maximum face amount for the single premium life product is based on what we call the maximum net amount at risk. And that's really the difference between the face amount we issue and the premium paid. That gap is the net amount at risk. Pretty hard to violate that because our software doesn't allow you to do it, but you'd have to put a lot of money into this to violate that cap. Cash values, they accumulate on a non-participating basis, but here's another big difference. Partial surrenders. That client who says, well, 2 years in, 3 years in, gosh, I had an emergency, I need some money. Can I take some money out of that without a problem? With the single premium whole life product, because it's after-tax cash funds, you can start taking partial surrenders from this product in policy year 2. 10% can be taken out in policy year 2, 20% of the available cash in year 3, year 4 it's 30%, year 5 it's 40%, and from the 6th year on, 100% of the available cash can be taken as a partial surrender. Loans, they can be taken at any time at a maximum rate of 8%. Don't know why you'd take a loan when you have such liberal partial surrenders. Accelerated death benefit riders, same 3 health event triggers we talked about with Generation Legacy, same one-time payout, unrestricted funds, all that's the same, but here are the differences. You can either say, our client could say to you, listen, I have no interest in keeping life insurance remaining. I want as much money as I can get right now. And in that case, they can do what's called a full acceleration. We'll talk about that. Or they might say, you know what, I do need some life insurance, so I'd like to keep a certain amount of life insurance paid up and accelerate the balance in cash. That's called a partial acceleration. So with terminal illness as an example, it's the same definition to qualify to get the money, but if they want a full acceleration, they can take up to a 95% of that face amount as a cash payment and have no remaining life insurance. Now, we do charge a $250 administrative fee to make that transaction. Or they can do a partial acceleration in that example. What about qualified nursing? Because they're going to live longer, they can do a full acceleration at 90% less the $250 admin charge, or again, do a partial acceleration. And for extended care, home health care, and adult daycare, because they're going to live longer yet, they can do a maximum acceleration at 80% less the $250 charge, or do, again, a partial acceleration, leaving some life insurance and accelerating the balance at that same percentage. Same definition for chronic illness, 2 out of 6 activities of daily living, or a client suffering from a severe organic mental illness. Either would qualify you. But let's look at these premiums to death benefit. At 65 with 50 grand, that male at level 1 underwriting would get a face amount of nearly $82,000. The female, a face amount of nearly $93,000. But let's not forget, you now have a second tier of underwriting, tables 5 through table 8. And in that case, across all ages and genders, you'll only find about a $5,000 to $6,000 reduction in face between level 2 and level 1. So that's a pretty small reduction to be able to have that second tier of underwriting, isn't it? So what did you just do for this lady at 65 who had a $50,000 CD that she just wanted to pass to the kids? You've increased her estate by nearly $43,000. She's probably sitting on a CD that's making less than a point in interest. She's getting 1099s every year, and she's got many of these probably in the bank, and you're able to show her a way to increase her estate substantially. She's loving you for this. Even if she was making 3% on the money in a 25% tax bracket, it's going to take her 28 years just to match that increase you're giving her an estate of nearly $43,000, knowing that the life insurance is always there to pay an income tax-free death benefit of almost $93,000. Here's the 7-year-old, little older, little shorter life expectancy, but the numbers still look good, don't they? For the male with 50 grand at 70, you're issuing a face amount at level 1 underwriting of nearly $74,000. For the female, the face amount at the same underwriting tier is just over $82,000. And again, at level 2 underwriting, the face amount reduction is about $5,000 to $6,000 less. Clients love it. Making less than a point of interest in CDs with the intent of just passing the money along, you're going to make a friend for life. And again, great opportunity to leverage that new friendship with asking regularly for referrals. Same story on forms for this product. Go to the product toolkit on the Balt for Life agent website, answer a couple of quick questions. It'll produce your forms for you, not a problem. We have that sales and marketing toolkit out there. We'll show you some of that in a moment. But now let's talk what I think is the icing on the cake for this program. And it really is our point of sale underwriting decision process. Many years ago when we came out with the Generation Legacy product for qualified funds, we were obviously recruiting a lot of agents who sold annuities. And they said to us, you know, this sounds great. I get the concept of asset transfer, but it's just, I don't want to get into the life insurance underwriting. It's too difficult. What if we had a way to write the app, get an underwriting decision at the same time? Well, that's what this is. You write the app, you make a call, you complete a 12-minute or less interview with your client, and over 90% of the time, we'll give you the underwriting decision right there. What they're going to do is when they make that underwriting interview with your client, they're basically going over the same health questions you completed on the paper app. The only difference is now they're running the data we need to look at the MIB level and the prescription drug level, so that if they see any conflicts out there in that data as compared to how the client answered the app, they can resolve it and make the underwriting decision. After the interview is done, by the way, we don't tell the client the underwriting decision. We're going to call you or tell you on the phone the underwriting decision. You're going to communicate that. We're also going to give you a confirmation number that we ask you to write on the paper app that you're submitting. Obviously, once the app's done, you're going to send the forms to us, but all the information on how to get this interview done is in your application and forms package you're going to print. The phone numbers that you see here, as well as the call center hours, which are 9 a.m. to 10:30 p.m. Monday through Thursday, as well as 9 a.m. to 6 p.m. on Fridays. These are Eastern times. We do support English and Spanish languages. Other languages are available upon request. And we do have TTY services for hearing impaired in both English and Spanish. The key thing is you must complete this interview within 5 days of completing the app. Now, you might say to yourself, well, what if I'm selling on a Saturday or after hours? I'm on the West Coast and you're early and I'm late. What do I do? Well, it doesn't matter when you finish the interview. You still want to call the call center and leave your name and number, the client's name and number, and a date and time for us to call them. We'll call them, get the interview done, and call you back with the underwriting decision. Ideally, you're calling during hours. We're getting the interview done and giving you the decision right then and there. What about pre-qualifying the application? Well, we have an app for each product, and the reason we do is for Generation Legacy, we have one tier of underwriting, standard through table 4. So as a result, we have one section of medical questions, a part A. If you get a yes in the Part A section of the medical questions, it means your client does not qualify through 4 tables. But if all the answers are no, the height and weight's good, the MIB and drug history is good, we're going to issue Generation Legacy. For single premium whole life, a different app, but we have 2 tiers of underwriting. So we have a Part A and B. Think of the Part A questions still as knockouts. If you get a yes in Part A, it means you don't qualify through 8 tables of underwriting. But if you're all no in Parts A and B, drug history and everything else looks good, we're going to issue Tier 1, standard through Table 4. If you get all no in Part A but 1 yes in Part B, everything else looking good, we're going to issue Tier 2, which is Table 5 through 8. So with that, I'm going to make a quick transition in the remaining time, and we're going to talk quickly with some sales and marketing ideas for you. Because I've been talking along the session today about the Baltimore Life Agent site and the product toolkit. And this is a screenshot of the home page of the agent site. And up at the top of the screen, you'll see these little colored boxes. Those are the product toolkits. And inside the toolkit is where you're really going to find just a wealth of materials out there to help you sell and market these products. Now, what I will tell you, and a big, big plug for IAMS, they've got great people inside there to help you understand not just this product, but the marketing and the prospecting, and can help you with any confusion you have with any of our stuff. Please pick up the phone and use them as a resource. They're great, great people to work with. Let's show you a couple of these things quickly in the time we have. How about Mobile Link? Just as a reminder, mobile.baltlife.com. Mobile Link is like having an agent guide in the palm of your hand. And if you pull this up on your phone and it looks great on your phone, when you get to that address, that URL address, just hit the shortcut on your phone to save that page as a link directly to your phone. And it'll put a little Baltimore Life ship icon on your phone. Now you're clicking on just like any other app. But once you are there, for both of the products we went through today, you'll be able to review the product information, the underwriting guidelines, but more importantly, a rate and value calculator. I have, and many, many, many agents have, sold product right off of their mobile phones, showing those ledgers and all the information a client needs to see. We also have great point-of-sale presentations. It's called Secure Solutions Presenter. It's a library of presentations on our products and other financial concepts. You can download that right from the agent site. So no matter whether you want to present on your laptop at point-of-sale or print it, these are nice presentations, very visually appealing. They tell a great story. They go through the great dialogue of questions in your interview with the client, and then go through the features and benefits of the product. Many things there to see, so I will tell you that Secure Solutions Presenter can give you a great storybook to tell the story to your client on these products as a solution. Let me run down the list because I'm going through these a little more quickly because I'm mindful of your time, that we stop at the time that we should, and that is our asset transfer analysis form. The asset transfer analysis form is a great supplemental fact-find form because this market is all about finding the money. So in the center of this form that you can print from the toolkit, we have our current assets to record, CDs, money markets, annuities, and other funds that the client has. You can show the client that if they transfer a portion of those funds not needed for living into one of the products, the impact that will make in their total estate value. The bottom of the form allows you to record the client's current income. That way you're sure they have enough money before you start tapping into their liquid funds. And the top of the form have those key dialoguing questions to be talking to your clients about. For example, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's not needed for your daily living? Well, most people get the leave behind money concept, and if they don't, it's going to create a great conversation. This slide is representative of another form that you can find in both product toolkits, and that's our single premium sales idea form. This form is just highlighting the ideas that are out in a much larger document, but it will take you through chapter and verse how to help you find money, sales ideas of how to find money. We've talked about many of these. The annuities not needed to support daily living. What about some of those older paid-up life policies where the cash values are close to equaling the death benefit? You might find 1, 2, 5 of those out there that you can 1035 right into the single premium whole life product. What about some of those old ULs where the cash values are going in the wrong direction? If you can rescue at least $5,000 of cash, you can give them a nice paid-up policy at a greater amount. And then, of course, we talked about the burial account concept. There's many other ideas out there for you to look at, and make sure you have a blank sheet of paper while you're reading it, because it's going to prompt you to start thinking about those people in your book of business you can immediately go out and see. Then we have as well the customizable marketing flyers. So, the marketing flyers have the concept of asset transfer, features and benefits of a solution, and then you can personalize these flyers with your contact information. Print as many as you need, save it, print it later. It's all out there for your use. We have print ads for you to use for both products. We have letters. We have mailer postcards. We have phone scripts. We have white papers, all of that out there in our independent agent website inside of both the Generation Legacy and Single Premium Whole Life Product Toolkit. So all that's out there for you to use. Now, Mark, in my closing remarks here, mentioned something about Baltimore Life's incentive trips. Wow, the Victoria trip sounds fantastic, but he's right. If you're writing for us and you're getting credits both ways, here's our trip coming up for next year based on this year's production. Have you ever been to Cabo? Cabo San Lucas, the Grand Fiesta Americana Golf and Spa down there at Cabo San Lucas in the Baja Peninsula. Beautiful trip. Next May 17th through the 21st, $600,000 in single premium, one of the lowest qualifiers out there, will get you and a guest all expenses paid on a trip to Cabo. The great thing about our trips is it's not only a low qualifying amount, but more importantly, we don't have business meetings. It's all about having fun and enjoying talking to a lot of other great producers and spending time with your significant other. So let's make sure we get you on the Cabo trip and also qualify you for the IAMS trips at the same time. So Mark, with that, I want to thank you and, of course, all the folks on the line today. We really appreciate you considering Baltimore Life for your business.
Absolutely. Nicely done. You know what I'm going to do real quick here before everybody starts to depart? I'm going to put out a quick poll here. If you'd like to get contract with the Baltimore Life, all you have to do is just mark yes, and then we'll email the contract over to you. And I do know there was some questions here, Gary, so I'm going to pull that up here, and let's just go through those. Let's see. David wants to know, is E&O needed to write Baltimore Life Insurance?
No.
Okay. And
I would always advise as an agent, it's smart to have it, but we do not require it to contract.
Yeah. And then Peter's asking if it's approved in the state of New York.
We do not operate as a company in the state of New York. So, no, it's not approved in New York. That's the only state we do not operate in.
And I guess one of the positive things, Peter, is there are a lot of agents, and you might be one of those, that writes business in some of the surrounding states, so we do have product around there, so certainly don't count us out. And let's see. Next question. Gerald says, I offered a single premium whole life. I did not call the call center at that time because there was not enough time. Can I now do a three-way call to finalize the medical questions? So in other words, to do the phone interview. Yes, you can.
Yeah, absolutely.
Okay. Anybody else have any other questions? Please go ahead and type those in the question box, and we'll take advantage of Gary's time here today so we can help in any way. You know, if you have any questions about a case, I always say, what's funny is if you look at a lot of agents and advisors out there today, so many started selling life insurance 30 or 40 years ago, and then they met annuities. And there was no underwriting. They're fast. They're easy. The commissions were great. And, of course, commissions are still good, but they're not quite what they used to be. I think we all know that. But the point is that years ago, if you cut your teeth on selling life insurance, if a person had cancer or a heart attack or a stroke or something like that, they're probably not going to get coverage. But things have changed a lot in underwriting. A person has a heart attack today, they're back to work on Monday. It's just medicine has advanced so much. So what I'm saying is, just because you think your prospect doesn't qualify for a plan, give us a call and we'll do some field underwriting assistance and find out whether or not your prospect can qualify. So don't walk away from the opportunity, I guess is what I'm saying. Kent wants to know, what is the commission rate for single premium life?
I'll let you handle that one.
Generally speaking, the street level is about 14%, and it will change once the client's age 80 to 85. And it's not a tremendous change depending on the product that you write, but I would say a majority of the cases that are written are going to be at the 14% commission level. So stop and think about those clients that you wrote annuities on 10, 15, 20 years ago. You're not getting commissioned on that anymore. So by introducing these products, what you're doing is you're showing them something that they never knew about. You're helping them to more efficiently pass this on to the next generation, but now you're getting compensated for your efforts. So it's just been a great, great market for our annuity producers. That's one of the first things I said when we started the webinar this morning. If you're in that market, it's a simple change. And I think one of the things that we see agents are most concerned about is the underwriting part of it. Trust me, things have gotten so much better that just with a simple phone call here to us, we're going to tell you, based on what you know from your client or your prospect, whether or not we should take an application. And, we're calling underwriting all the time and asking, does this look like a risk we can handle? They'll tell us yes or no. And so don't walk away from opportunities is what I'm telling you. Peter says or asks, what is Baltimore Life's ratings?
We are a B double plus company and extremely well capitalized. We have our BCAR scores and our capitalization scores that Best puts out. We're in easily the A plus categories from that standpoint. But as the overall rating, being a smaller company, we're B double plus. I would encourage you, Peter, to go out to our public website, go into the About Baltimore Life section, and you're going to find a current financial overview on Baltimore Life there. You can look at our portfolio, you can look at our capitalization there, and I think you'll be extremely pleased that a company 134 years in the business now that is extremely well capitalized and doing great things for our clients and your clients through the years.
And I tell you, we do business with a lot of companies, and working with Baltimore Life it's a pleasure. It's simple. The people there are very friendly, and nothing but great experience. So there's a lot to be said. There's a lot of value to be put on that. Let's see. Question. They have phone interview also. Yes, there's a phone interview. Once you complete the paper application, you want to do the phone interview at the time of the application. It's just a lot faster that way. Plus, you can get it approved right there while you're with the prospect or client. Any other questions? I'm going to go ahead here, and it looks like pretty good response on the poll there. So for those of you that do want to get appointed, we will email you a contract that will, and again, that's the paperless contract where once you complete that, you can get set up with any of our carriers in the future, so you don't have to complete additional paperwork in the future. Because obviously we do
Mark,
a lot of... Go ahead.
Go ahead, Mark. Hey, just if I could here, just a quick reminder, if you're contracting now for the first time with Baltimore Life, one of the things you're also going to get from us is we'll send you right after you contract what we call a virtual toolkit, which again will give you all the pointers on the materials you need to get started. We even have a recording of a webinar out there for you. So it's a nice, quick, fast start package. But again, call the folks at IMES to help bring you all this together and get you started quickly, because getting started quickly is what it's all about.
Absolutely. Appreciate you saying that. Okay, Gary, I know you're very, very busy. I appreciate you taking time to help us out here this morning. I'm going to go ahead and close the poll. We'll conclude the webinar. I will email this out to you here. It should be before the end of the day, along with the contract for those of you that requested that. Of course, if you have any questions, you can call us here at 800-255-5055. Everyone have a great weekend, and certainly do look forward to speaking with you soon. Thanks again, Gary.
Thanks, everyone.